Well, ladies and gentlemen, today is the day that Strategy has finally announced they are going to be sellers of Bitcoin. Saylor has been this cult-like leader for a number of years, and a lot of people give him far more credit than what he is really due. If you look at Strategy's cost average on Bitcoin, it's currently up around 75,000 if I'm not mistaken. Bitcoin is trading at 60,000 or so. So when Bitcoin was 100,000, 110,000, 120,000, so on and so forth, they were hardcore hodlers. Sell a kidney before you sell your Bitcoin. We're never going to sell Bitcoin. No matter how low Bitcoin goes, we're not going to sell. That was the general idea that kept getting pushed around by various people. But now, with Bitcoin down more than 50% off of its all-time high, and with them down billions of dollars on their investment, they have changed course and done a 180. They are now willing to sell Bitcoin. Of course, the market reacted positively to that news. We can see Stretch actually climbed off of its low of $71.25, which was almost 29% off of par. It's now climbed back up to around $84 at the current moment, with a daily high of nearly $85. So if you were trading that, congratulations, it actually pumped about 19%. Unfortunately, we really don't know what's going to happen in a month, 3 months, 6 months, 12 months, etc. This was a big announcement, and so yes, there's positive news. There's some people who believe this is going to move back to par, and it very well may. I am not personally willing to take a bet on it. The trust has been eroded, in my opinion. Most people who are invested in Stretch are underwater. We can see that by simply looking at a VWAP, which is currently sitting at 93.39. What does that tell you if an asset is supposed to be pegged at par of $100 and the VWAP is 93.39? Think about that for a moment. Of course, it was also good news for Strategy stock because some people felt like, this is what they need to do to right the ship. So it also pumped today. But here's the irony. Even without any news or catalyst, if you look at this, 1, 2, 3, 4, 5, 6, 7, 8, 9 red days in a row, almost a 40% drop over those 9 days. This is an oversold asset. So bouncing is not impressive because it will often bounce simply because shorts start taking profits. You have no way to know that this is buyers stepping up when it very well may be bears closing positions. Price is still currently well below the neckline of the head and shoulders that points to a $20 price target. But remember, in my head and shoulders video, I said, if this monthly candlestick can close back above that neckline and leave a tail behind, it could signify that there are trapped bears. Markets like to punish trapped traders, whether it's bulls or bears, doesn't matter. And so if you do end up with trapped bears, this can absolutely pump off this level. Doesn't make me an investor in Strategy, but it does mean there could be some trade opportunities to the long side if that comes to pass. Personally, I'm still betting that it's more likely that this eventually falls to $20. It doesn't have to get there in a straight line. Again, it is oversold, and so there can be bounces along the way, but this is ultimately my target. I believe it will get there before 2028. So what does all this mean for Bitcoin? Well, I think it's really bad news for Bitcoin because we saw that when Saylor came out and actually sold 32 Bitcoin, or at least when Strategy did, when they sold 32 Bitcoin, the market completely overreacted to that. It was ridiculous that a company with 800,000 Bitcoin selling 32 was somehow some big thing. But I think what happened was it violated trust. When you sit and you build your whole spiel off of I will never sell, and then you do sell, and then you essentially make fun of people saying, I never said I wouldn't sell. I told you not to sell. That was one of the most arrogant, condescending statements I have ever seen somebody make toward their investors. And I think it left a bad taste in a lot of people's mouths. So for Bitcoin, unfortunately, if Strategy starts to sell their Bitcoin, that is additional supply that the market has to be able to absorb. There have been statements made in the past by various people that the buying pressure, the demand from Strategy helped to actually push the price of Bitcoin up. They own about 4% or so of the total supply of Bitcoin. So if they start unwinding that position, then the market has to be able to absorb that. If it can't absorb that, that will push price lower. And I've been saying for many months now that I felt like the catalyst that would push Bitcoin to its bear market lows would be strategy, and more specifically, Stretch. Fairly early on, I felt like Stretch was going to eventually demand they sell Bitcoin in order to fund those dividends. And I felt like selling that Bitcoin would be a very bearish development for Bitcoin itself. And that's literally what's happening right now. We can't say for sure what's going to happen with price. These are predictions, based on of my experience and what I'm seeing. I could absolutely be wrong. But so far, this has played out exactly as I expected it would. First, in August of 2025, I did videos, I did posts saying that capital was rotating out of cryptocurrency. It was actually rotating into AI. That is exactly what's happened. Since that point, it has done nothing but fall. You can see that idea here. Again, it was posted in August, right here around 324.5 shares to a Bitcoin, and it just went straight down from there. Even had our little bounce, which would have been our last point of supply bounce, and then continued the downtrend. So right now, we are likely somewhere around here, if I had to guess, versus AI stock. So that has come to pass exactly like I expected. And, like I said, all along, I felt like strategy was going to be the catalyst. All bear markets tend to have a catalyst that leads to the ending of the bear market. It's just how markets work. Eventually something happens and something breaks, and it causes so much fear and panic in a market that it capitulates. And even the most, diamond-handed, investors, a lot of them will give up. And that's oftentimes where the best opportunity is. You can look at any market cycle chart and you'll see this over and over again. This is how markets work. You go through a markup or an expansion phase, you go into euphoria, which ends up being distribution. You go into a markdown phase, and at the bottom of the trough, despondency, depression, all that stuff, that is the point of maximum financial opportunity. So if you're a Bitcoin bull, I suggest you root for a big time Bitcoin sell-off, because that will be where you can load up. And if you're right and bulls are rewarded with $1 million Bitcoin someday, the cheaper you can buy it today, the better. I'll wrap this video up by pointing out some simple math for you, however. A lot of people are chasing, the 10% average return of the stock market. A lot of people are chasing, double-digit returns, thinking Bitcoin has to go up. Those things may or may not happen. I can't say for sure. What I do know is, here's the math behind bonds. Long-term treasuries that are paying about 5%, a little under 5% for 30 years. Over the next 3 years, that bond's going to pay out about 14% in coupons. If rates then fall 1% from where they're at today, that bond should rally about 18 to 20%. If it rallies 18% on top of the coupons, that's going to be a total return of about 32%. Averaged out over 3 years, that's roughly 9.8% compound annual growth. That's bonds that are backed by the government. That's bonds with a guaranteed rate of return. Not the 9.8%, that's not guaranteed, but the coupon value is guaranteed. So essentially, I can take a trade like this, I'm not saying with my entire portfolio, but at least a piece of it. I can take a trade like this, have less risk, and still have a really decent return. And the reason I'm pointing this out is not because you should necessarily do this, but because you have to understand that professional investors, they understand this. You might not, depending on where you're at in your journey, but professionals do understand this. And this is what professionals are looking at. They're looking at, is the additional risk that crypto entails worth it compared to a fairly safe 9 to 10% return on bonds if this theory plays out. They're also looking at the stock market. The stock market is at some of the highest evaluations of all time. We're currently sitting very near the same levels as the dot-com bubble on the P/E Shiller ratios. We're well beyond the ratios that we saw at the peak of the 1929 bubble. So investors look at that and say, my risk is rising. Maybe it's time to rotate and look for returns elsewhere that don't incur so much risk. And they will look at bonds. When bonds are sitting around 5%, that becomes a very attractive bet. And the thing is, I actually suspect we're going to see slightly higher treasury rates, which means that bonds are going to become even more attractive, because you get the coupon rate on the bond, but you also get a capital gain if rates fall and you're holding the bond. You have to understand this, because money sloshes around markets and it's often chasing the best risk-adjusted rewards. If you enjoyed the video, give it a thumbs up, subscribe to the channel. Please remember, I'm some guy sitting in a spare bedroom, and that means that nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. Thanks for watching. I appreciate it. As always, please remember to invest and trade safely.